The next type of tax we're going to discuss is payroll taxes. So payroll taxes are withheld from employees' wages and paid by employers to fund various social programs such as Social Security, Medicare, and unemployment insurance. And before you completely skip this lesson because you don't have any employees, I want to emphasize that this is really important because there are tax breaks associated to, having employees, including yourself. So if you start to W-2 yourself and pay yourself as an employee, there are tax deductions. So I'm going to talk about those once we go through some of these definitions and when we get into calculating actual payroll taxes. So employers are required to withhold and pay federal payroll taxes, which includes Social Security and Medicare taxes, as well as federal income tax withholding. Social Security and Medicare taxes are, they're referred to as FICA taxes and are calculated based on a percentage of the employee's wages. The employer is required to match the amount of FICA taxes withheld from the employee's wages. Federal income tax withholding is calculated based on the employee's W-4, which is the form they fill out to elect their withholdings, and the tax pay tables, which are also provided by the IRS. So those two things. Now, I want to mention that even though you have to match the FICA tax requirements, whatever your business pays in payroll taxes is tax deductible. Next, we have state and local payroll taxes. So some states and local governments also impose payroll taxes on employers and employees. These taxes may include state income tax withholding, state unemployment tax, and local taxes such as city or county taxes. Next, we have payroll tax deposits and reporting. So employers are required to make periodic payroll tax deposits and file payroll tax reports with the appropriate tax authorities. The frequency of deposits and reports depends on the size of the business and the amount of payroll taxes owed. Employers must also provide employees with their W-2s, which reports the employee's wages and the amount of taxes withheld by January 31st of each year. So by January 31st, the W-2s have to be in the mail. Last, we have payroll tax audits and penalties. So employers may be subject to payroll tax audits by the IRS or state tax authorities to ensure compliance with payroll tax laws. Employers who fail to properly withhold and remit payroll taxes may be subject to penalties and interest charges, as well as potential legal action. So it's really important that you are maintaining accurate records. Now, if you yourself are going to be W-2, so if you're a single member LLC, or if you don't have any other employees, but you're paying yourself as a W-2 employee, make sure that you're still issuing yourself a W-2 by January 31st. Now let's talk about self-employment taxes, and this is where I'm going to get into the tax deductions and all of those things. So self-employment taxes are taxes that self-employed individuals must pay on their income and fund social programs such as Social Security and Medicare taxes. So self-employment tax rates are, they consist of the Social Security and Medicare taxes and are generally higher than the rates for payroll taxes paid by employees and employers. So for 2021, the self-employment tax rate is 15.3%, and that's the same for 2022, of your net earnings, which consists of 12.4% for Social Security and 2.9% for Medicare. Self-employed individuals can deduct half of their self-employment tax when calculating their federal income tax liability. So I'll give you this example here. I recommend an LLC to do this, but you can also do this as a sole proprietor. So if your tax obligation is 15.3%, you can deduct the 7.65%. So you can deduct half of that, meaning you pay 15.3 up front, but you get to write off half of those tax obligations. Moving right into tax obligations. So self-employed individuals are required to pay self-employment taxes if their net earnings from self-employment are $400 or more in a year. Net earnings are calculated as gross income minus deductible business expenses. This is where all those deductions come in handy. So if you made $1,000, and your overhead costs, your business expenses were $200, then you have to pay taxes on the $800 that's remaining. Next, we have self-employment tax reporting and payment. So self-employed individuals must report their self-employment income and pay self-employment taxes using the Form 1040 Schedule SE. The form calculates the amount of self-employment taxes owed based on the individual's net earnings. Self-employed individuals may need to make estimated tax payments throughout the year to avoid penalties for underpayment. Now, if you're working for somebody else, like another business, you would get a 1099. Moving into tax deductions, self-employed individuals can deduct half of their self-employment tax liability when calculating their federal income tax liability. In addition, self-employed individuals can deduct business expenses related to their self-employment activities, such as home office expenses, equipment, and supplies. So going back to, if your home office is 10% of your house, then you can deduct 10% of your rent, your mortgage, your utilities, all of that can be deducted. So the last thing we're going to cover is independent contractors. I mentioned this before with my comment about 1099. It's extremely similar to self-employment taxes, except for the forms that are being filled out. So independent contractors are self-employed individuals who provide services to businesses or individuals on a contract basis. As self-employed individuals, independent contractors have tax obligations that differ from those of traditional employees. So if you are going to be 1099ing your employees, so if you're going to hire somebody and you're going to 1099 them, there are some rules that go along with this, and I'll mention a couple of these rules. One being they have to supply their own tools. So if you're hiring somebody to work for your company as a 1099 employee, they have to operate independently. You can tell them what the job is and what you need them to do, but you can't, micromanage them. You can't manage them at all. You're not supposed to provide them any material unless they ask for it, but they have to operate independently. This, for example, if I was building a house, if I'm the general contractor building a house, my employees, my W-2 employees, are going to be the ones who are putting up the studs. But when I hire an electrician, I'm expecting that electrician to come in as a 1099 employee and do what they need to do to secure the electrical. I am not going to be giving them tools. I'm not going to tell them how to do their job. That's why I'm hiring them. They're the specialist. So that concept is how 1099 employees operate a little bit differently. So independent contractors are subject to self-employment taxes, which again consists of Social Security and Medicare taxes. Self-employment taxes are calculated as a percentage of the contractor's net earnings from self-employment, which is calculated as the gross income minus deductible business expenses. Again, for the last couple of years, the self-employment tax rate has been 15.3%, 12.4% being Social Security, and 2.9% being for Medicare. Next, we have the estimated tax payments. So independent contractors are required to make estimated tax payments throughout the year to avoid penalties for underpayment. Estimated tax payments are typically made on a quarterly basis and are calculated based on the contractor's estimated tax liability for the year. So let's say you made $1,500 for the first quarter of 2023. If you're going to set aside or pay that 15.3% in taxes, that means at the end of this quarter, you need to pay $229.50. So that's 15.3% of $1,500. And that's just to make sure you're maintaining your tax obligation, because what most states and the federal government see is that independent contractors end up owing a lot of money at the end of the year. So this is to get ahead of that so you don't have a giant tax bill at the end of the year. Next, you have your tax deductions. So independent contractors can deduct business expenses related to their self-employment activities when you're calculating your tax liability. Business expenses can include, again, your office rent, supplies, equipment, and travel expenses. It's also important for contractors to keep accurate records of their business expenses. And, if you need help, definitely consult a tax professional to ensure that you're deducting all eligible expenses. And again, I included the IRS publications in the earlier lessons, but they're also in the textbook. Last is going to be your tax forms. Independent contractors must report their self-employment income and pay self-employment taxes using the 1040 form Schedule SE. In addition, independent contractors must file a 1099 miscellaneous. This is filed with the IRS, and you have to provide a copy to each client for whom, you provided services and received payments of $600 or more during the year. Another form I want to mention is a W-9. So if you have a business and you are doing business with another business, right, they hire you on as, let's say, a consultant, they are going to ask you for your W-9. And this is why. They need to put in their records that they did a business-to-business transaction. They're not paying payroll taxes for you because you're essentially operating as a 1099 employee.